Hello, and thank you for watching this International Financial Reporting for Non-Profit Organisations webcast on accounting basis. This webcast is part of a series that covers some of the key issues in financial reporting that affect non-profit organisations, or NPOs. This session begins by setting out the core premise that the guidance should be for general purpose financial statements prepared on an accrual basis. Next, we'll take a closer look at the three possible bases of accounting considered, followed by an analysis of the advantages and disadvantages of each, specifically in the context of the non-profit sector. We'll then reflect on principles and steps we're taking to mitigate some of the challenges identified. Finally, we will explain how to share your opinions about this issue by responding to the consultation paper. It's important to be clear about which financial reports are the focus for the IFR for NPO guidance. Transactions of an NPO are entered into an accounting system, which classifies and summarises them to produce financial reports. These may be produced in a range of formats for various users or at different points in time. Some reports are for internal use by managers and governors. Special purpose reports may be produced for donors with respect to projects that they fund. General purpose financial statements are produced usually once a year. They cover all the transactions and balances of the entity with respect to the period and are designed to meet the needs of a range of users. They're also referred to as the annual audited accounts. The IFR for NPO project is developing guidance on the general purpose financial statements and accompanying narrative reports. The basis of accounting is the method used to determine when transactions and economic events are recognised in the financial reports. The IFR for NPO project has three stated objectives, and these have a bearing on which accounting basis is most appropriate for the guidance. The first objective is to improve the quality, transparency and credibility of the financial reports of NPOs. The second objective is to support the provision of NPO financial information that is useful for decision-making and accountability, balancing the needs of both preparers and users. The third objective is to address specific NPO issues, which will promote increased comparability of NPO financial reports. The guidance needs to have a single basis of accounting so that financial reports are prepared in a consistent way. A core premise of the guidance development process is that the accrual basis is best suited to meeting the project objectives, as we will set out during this session. There are three bases of accounting that are commonly used: cash, accrual, and modified cash. We'll first review these before comparing the advantages and disadvantages of each. Using the cash basis, transactions and economic events are recognised when cash is received or paid. This means that assets owned and liabilities owed are not recognised. Note that cash does not just mean physical currency like notes and coins, but also receipts and payments into bank or mobile money accounts. Tracking cash transactions is an essential bedrock of all accounting, also used as a foundation for accrual-based accounting. Cash basis is the simplest to do in terms of bookkeeping and may therefore be favoured by very small non-profit organisations or those with more limited capacity. Some donors request their project reports to be prepared on a cash basis because it's easy to see how resources have been received and spent, including, for example, on assets or equipment, together with closing cash balances. Cash basis reports do not give a comprehensive view of an organisation's financial performance and position. For example, if goods have been delivered and a bill received, it will not be shown in the accounts until the bill is paid, even if this is months later. Similarly, if a supplier is prepaid in advance of delivery of services, the payment will still be shown as a cost. This has an impact on the picture presented by the financial reports, reducing transparency and accountability, as well as usefulness for decisions. Using the accrual basis, Transactions and economic events are recognised when the event occurs. This is when, for example, a service is provided, rather than when any related cash payments are made. Assets and liabilities are recognised. Income and expenditure is recognised as earned or incurred. Even if payment is made before or after the economic event, accrual accounting can show the transaction at the right time. Accrual accounting is more complex in terms of bookkeeping and may require more sophisticated accounting systems or trained staff, but it results in richer information. Assets or equipment used for many years are recognised over time rather than as a one-off cost. The recognition of the cost of the asset therefore matches its use in the NPO's activities. All international accounting standards require use of the accrual basis. The reporting outputs include a statement of financial performance for the period. This is also known as an income statement, or income and expenditure statement, profit or loss, or statement of financial activities. They also include a statement of financial position, known as a balance sheet, which sets out the amount of assets, liabilities, and fund balances held at the end of the period. These financial statements, together with the cash flow statement and notes, give a comprehensive view of an entity's performance and position. This in turn enhances transparency, accountability, and decision-making. The modified cash basis is also known as the hybrid or the modified accrual basis. Using this method, some transactions and economic events are recognised on a cash basis, but others on an accrual basis. Accordingly, some assets and liabilities may be recognised while others are not. There is no international standard or framework defining which assets or liabilities should be recognised and which should not, so this basis covers a wide variety of practice. The modified cash basis is commonly used among NPOs for bookkeeping purposes, with some making adjustments at the year end to create accrual-based financial statements. Note that in the consultation paper and in the analysis that follows, reference to the modified cash basis means financial statements presented on a modified cash basis rather than bookkeeping practice. In summary then, cash accounting is an essential foundation for all accounting. Cash basis financial reports are easier to prepare and are preferred by some donors for project reporting, but provide less complete information, such as about assets and liabilities. Accrual accounting is more complex, but accrual-based financial reporting is required by all international accounting standards, as it provides more complete information. Modified cash involves a mixture of the other forms and is widely used in practice, but there is no international framework to define it. Going back to our objectives, the first was to improve the quality, transparency, and credibility of NPO financial reports. With respect to these goals, cash basis reporting has the advantage that it can be easier to track project-based receipts and payments, and the concepts can be easier for users to understand. However, reports on a cash basis cannot provide information about the overall financial performance and position. Accrual basis reports can give this comprehensive view with more complete, high-quality information about financial position and performance. They can also increase transparency, providing information about future payments and resources due. The reliability and integrity of financial information can be improved through full double entry controls. Being consistent with other international accounting standards, accrual-based reports will be more credible. But accrual accounting is more complex, and therefore NPOs are likely to need access to some degree of technical accounting capacity and software. Likewise, users need a level of knowledge to understand the information provided. Depending on how it's applied, the modified cash basis can make it easy to track projects, with the additional information about some assets and liabilities. But it gives an incomplete picture of an NPO's financial position and performance, and it lacks credibility, with no international standard defining its use. second objective is to support the provision of NPO financial information that's useful for decision making and accountability, balancing the needs of preparers and users. With respect to these goals, the cash method is preferred by some donors interested in tracking specific projects, and it may be sufficient for very simple organisations, requiring less resource to produce. However, without useful information about assets and liabilities, NPOs may be unable or less motivated to manage them actively, and it may be hard to obtain a long-term view of an entity's financial viability. Accrual-based accounts can contain all the information needed for users to hold management to account and make funding and other decisions from an informed point of view. Information about assets owned, their condition and use could be useful for both users and preparers. However, it can be more resource-intensive to produce financial reports, and any additional information in them is only useful if it can be understood by stakeholders. Reports prepared on a modified cash basis are useful in that they provide some information about assets and liabilities, but the incomplete financial picture may impact decisions. The third project objective is to address specific NPO issues, which will promote the comparability of NPO financial reports. The cash method may accommodate some individual stakeholders' needs, particularly project owners, but will not address all the NPO-specific issues identified, and gives less comparability because timing issues can lead to differences in reports. The accrual method can address all the NPO-specific issues, and financial statements can be more easily compared when all relevant transactions are recognised. However, if the guidance offers options for preparers to choose the most relevant or applicable treatment, this can reduce comparability. Also, some treatments may require increased use of judgment, which can both reduce comparability and increase compliance costs. The modified cash basis would allow for some, but not all, of the NPO issues to be addressed, and less comparability, as not all accrual information is shown in the financial reports. After careful consideration, the guidance development team have moved ahead using the core premise that the guidance should be accrual-based because it's best able to meet the project objectives. More complete information improves quality and transparency. Consistency with other international standards improves credibility, and the information provided is useful for decision-making and accountability. The NPO-specific issues identified through various studies in recent years can all be addressed, which should result in greater comparability and consistency between entities. The needs of most users of an entity's general purpose financial reports are best met using the accrual basis. Project owners still have the option to request reports in formats of their choosing if needed. Finally, by keeping the guidance as simple as possible and focusing on the needs of a majority of small and medium NPOs, adoption should be achievable by many preparers. In this session, we've explained why the accrual basis is the most appropriate method for the development of the guidance. Nonetheless, there may be challenges in transitioning to this approach which are not being ignored. Here are some principles we're following and steps we're taking by way of mitigating some of these challenges. Avoid unnecessary complexity. In our webcast about the foundational framework for the guidance, we describe our proposal to use the IFRS for SME. This framework removes some of the more complex and subjective requirements of full international standards like IFRS. Engage with donors. The project has established a donor reference group to examine how their information needs can best be met. This will include, for example, fund accounting, expended classification and disclosures. We're also working with complementary initiatives that seek to harmonise project-based donor reporting, such as use of the Money Where It Counts protocol. This is referenced in the consultation paper in the supplementary material. We'll advocate for the use of accrual-based information as appropriate. Engage with regulators. In particular, we will clarify how we see the guidance being used by very simple NPOs. Cash accounting might be sufficient to meet their more basic decision-making and accountability needs, with no overall benefit in moving to an accrual-based standard. In Chapter 5 of the consultation paper, we describe the types of NPOs that we expect to derive most benefit from the guidance. Provide freely available training resources. These will explain and support understanding and application of the guidance for preparers, users and auditors. This is planned for the final phase of the project in 2024. Provide tools. Humentum has developed an accounting basis diagnostic tool to give NPOs and donors a more detailed understanding of where their practice and requirements currently fall, particularly within the spectrum described as modified cash. NPOs and donors can use the tool to make strategic choices about how to develop their bookkeeping and grant reporting practices. More details can be found in the resources section of the project website. Amongst a range of issues covered in the consultation paper, we want your views on what do you see as the main challenges, if any, with guidance that is accrual-based. Please respond to the consultation paper. The consultation period ends on the 24th of September 2021. Shape the future. Share your voice. Submit your response.